Hey everyone, welcome to the KE Report, a daily editorial. Monday, June 30th, last day of the first half of 2025, and we are chatting again with Craig Hemke, founder and editor of TF Metals Report. Now, Craig, this is a very choppy, shortened trading week in North America. Tomorrow, Canada today, so the Canadian markets will be closed, and July 4th coming at the end of this week. That's always a big holiday down in the U.S. A lot of people, I think, away from their desks either early on this week in Canada or late in the week in the U.S. What does that mean for what you're going to be watching in terms of markets when it comes to precious metals then, Craig?
Well, hi guys. It's going to be a nice holiday shortened week. We all like those from time to time, that's for sure. But there's going to be a lot of action this week. We are beginning the week here on Monday with just kind of the usual news flow, nothing crazy out there in terms of economic data. Some updates on Trump's big, beautiful bill as it moves out of the U.S. Senate. Trump continued to egg on Powell in terms of, wanting to cut rates. Some talk from the Treasury Secretary over the weekend about continuing the Yellen policy of keeping things really short in duration, like 2-year notes and under, until they can get long rates down. All of that is combining to hit the dollar index pretty hard today, which is down about 50 cents, falling toward, now it's below 98. The next level looked to be around 96, and it's moving that direction. My concern, once we get today behind us and we begin the new month, quarter, the back half of the year, my concern is that it's somewhere along the line this week, whether it's data driven tomorrow, data driven on Thursday, whatever, that we get a bounce in the dollar index. The metals aren't doing much today, and even the base metals, the ones that have been cooking, copper, platinum, and palladium, aren't doing much today with the falling dollar. And it makes me worried that if we get something, where the dollar rallies back 50 cents, that we'll have a little downside in the metals, which, again, you get a little hem and hog, come and go. It might be a chance to take a trading position if you do get some weakness. But nonetheless, it'll be interesting to see how this data plays out. It's going to be really busy. I'll just continue with that for a second. The JOLTS report tomorrow, job openings and quits. 10 o'clock Eastern, that'll move things. The manufacturing PMIs are tomorrow. The service sector PMIs are on Friday, or on Thursday, I should say. But also the latest jobs report will be on Thursday as well. So again, expect a busy week regardless of the holidays.
Yeah, Craig, and looking at the dollar from what you were just mentioning, it's at 96.57 right now. So it's well below 97, not just below 98. And it doesn't seem to be as big of a tailwind right now for the metals as one would expect, but they don't always move. Sometimes they move in tandem, and sometimes they don't move at all based on each other. So it's not always an inverse correlation. But what you just brought up with all that economic data that's on tap, I guess my question is, do you think it even matters on a week like this where hardly anybody's paying attention? A lot of people are mentally on vacation or going on vacation. Everybody seems to be waiting for the Fed to do something, and they've signaled that there's no big changes in store in the intermediate term. They seem very conflicted internally, the Fed does, as far as to cut or not to cut. Do you think any of this economic data matters like it may have 1 to 2 years ago where people obsessed over it?
Yeah, I think it will, even with the lighter volume and with a lot of human being traders not being present this week. The headlines will still be traded by the algos, the high frequency trading algorithm, computers that scan the headlines and react. And when they react by either buying bonds or selling bonds, buying the dollar or selling the dollar, then there are other computers that see those movements and react by buying and selling gold and silver futures. So we'll have an impact. It's been an interesting 3 weeks, though. It hasn't even been 3 weeks since the last FOMC meeting. The Fed with their summary of economic projections and their dot plot was barely leaning towards 2 rate cuts this year. And without, any real significant economic data over the last 2.5 weeks, the market now is pricing in 3, which I don't quite know how to take. Because again, what if that starts getting priced out and the dollar index starts to bounce back? Those are things that could definitely be headwinds for us in the weeks to come. The next Fed meeting's coming up in 3 weeks. Maybe we'll get some more clarity there. But as we look at this data this week, it will impact that overall picture. If we get to Thursday morning and let's say that, they actually come up with a jobs number that's accurate, that doesn't have to simply be revised lower next month. They skip the whole revision part and just come up with a low number to begin with. Unemployment rate were to tick up. That would be enough to spark a pretty good Friday rally, you would think. So the data will matter this week. It'll be interesting to see how it plays out.
Craig, I'm curious your thoughts on the gold price here because gold is still at this just historically high level, right around 33, 3,200, in around there. It's touched as high as 3,500 back in April, but for the most part, gold hasn't done much in the last few months. And that's as we're hearing more about gold on mainstream TV, a lot more commercials about it. The gold stocks have done pretty well during this time, but other commodities have also done well. Silver's done well over this time. But again, gold hasn't really done much over the last 2 to 3 months. Why is that?
Well, I actually just was writing about this morning. What it reminds me of is December the 1st of 2023 through the end of February 2024. And you guys remember the price had gone sideways for about 3.5 years after COVID. We peaked up around $2,000, a little bit above there in August of 2020. And then just, it was aggravatingly sideways. It seemed like it was going down a lot of the time. But then it finally broke out on about the 1st of December, but then spent 90 days going sideways. And the chart of that consolidation looks a lot like the current consolidation. So the idea that, the gold could go, sideways for 3 months, certainly isn't unprecedented. What's interesting though is if you go, I went back and looked at some of my writings, some of the things I was thinking about, and what I was reading elsewhere back then. And it was, oh yeah, look at gold is double topped, it tried to break out and now it's going down to 1,500, and all this kind of stuff. And it's remarkable how similar that is to some of the analysis out there today. Oh, gold is double topped, and now it's got to pull back to its 200-day moving average and go to 2,500 or 2,800. And the problem is, for the people that bought it back then, bought the story, the narrative back then, they missed out on a 60% rally. And I'm afraid too many people are buying the narrative now of it's overbought and it's crowded. It's like you guys have seen the chart that people like to spout, when they're pushing an agenda that it's overbought. Look at the GLD. It's doubled the amount of assets it's got. Its asset base gone, whatever, 100 billion to 200 billion, whatever it is. And look at that. So that's clearly a sign that, the price is too high. And that's because the price has gone up. The actual amount of tonnage of gold in the GLD inventory is still 25% below its highs from 5 years ago. And things like the GDX has seen nothing but outflows this year. So I don't know. I don't go by the notion that it's overbought. I don't think the price is too high by any measure at all, given everything's going on monetarily and fiscally. So anyway, long rambling answer to your question, Corey. But I wouldn't surprise me if we just continue to consolidate for a little while longer and then bust higher.
Well, Craig, I want to give you a TF Metals hat tip on being one of the few guests that was on the show back in November and December of 2023, noting that that's actually when the breakout happened. A lot of people still have amnesia about this, but if you remember back, that's when we saw the highest daily close, highest weekly, highest monthly, and highest quarterly. And then, like you say, there was a 90-day tread sideways. So everybody keeps thinking that the breakout happened in March, but really the breakout happened at the end of 2023. And that was the bell ringing that the breakout in March was coming. And yet so few people were positioned correctly. So I want to give you a hat tip for being one of the few guests on the show that was noting it as it was happening. Let me ask you, since we're at the end of the month, end of the quarter today, as we record this, what about our friend silver? What about silver doing the same kind of thing and breaking up the 37, now pulling back into the 35s? A little bit of excitement there, but not the same kind of excitement. Are we going to see something where silver channels sideways and then in 90 days it blasts higher and then people think that the breakout we just saw didn't happen and have amnesia about it? How are you looking at silver at the end of the month, the end of the quarter?
Well, first of all, thank you for that, Shad. And I was hoping that you'd kind of turn that to silver because, yeah, it's been a rather interesting couple of days watching silver trade. I'm not sure what the significance of $36 spot is, but you can even see it today. As we've gone through the day here on Monday, the dollar's been plunging And silver's had about a 15-cent range since the COMEX opened, which, as we are talking, was about 6 hours ago. Regardless of all that, we are painting a really nice green monthly candle on the monthly silver chart. But we're also wrapping up the quarter. And if you've got anybody can pull up a quarterly chart, take a look at that one. Now, we're not at all-time monthly or quarterly highs just yet. But oh boy, you can certainly see the trend. No doubt about that. And so I think the chart is revealing what's coming next. What you're seeing in platinum, palladium, and copper is also revealing what's coming next for silver. I'm not, I don't want to get anybody thinking, though, it's like to the moon, $80, that kind of stuff. But it sure does look to me like silver's got a chance to move even higher here in the short term, up to the upper 30s, and, do its usual dance going forward. But then I'll remind everybody, that last $10 in 2011 came pretty quick. We finished March, the first quarter of 2011, with the all-time quarterly high, 37.65, something like that, basically 38. The monthly all-time high then was the end of April, right before the party ended, at about 48.50. That was, there's precedent for it to move pretty quick once it gets into the high 30s. And remember, we've talked about this before too, guys. Silver kind of creates its own momentum. I don't need to go through that whole analogy again. But there's certainly at least a chance at this point. The chart is trying to tell you that we might have some pretty good times ahead.
Craig, do we need to worry, though, if silver does spike? As you said, it can go $10, $15 in a month. It can also give it up that quickly, too, because we look back at 2011 and it went up, it went down, it went back up, and it went back down again.
Oh, you never want to take anything for granted. History would suggest in silver, got to stay pretty nimble, that's for sure. But, at the same time, what took place in 2011, and that was back when I was just beginning to kind of get everything rolling with my website and everything else. So I remember it pretty well. What took place back in 2011 is totally different situation from what we have now. And so, the thing with history repeating and rhyming and that kind of stuff, I don't think it repeats or rhymes at this point. I think it's an entirely different situation here 14 years later. Again, I'm not trying to say, so we're going to 60 and 80 and all that stuff. It may very well happen. I'm just more concerned with what happens now in the very short term. Will the dollar continue to fall? Will these other metals continue to rally? Will that eventually force silver even higher and then begin to create its own momentum? Because for now, it's just kind of still, it's flagging a little sideways itself between about 35.50 and 37. And I'll be curious to see how quickly that little flag can end here in the days ahead.
Well, and Craig, to the point you just made, that while cycles may rhyme, they're all unique in their own right. Not to saying that this time is different, just that no cycle is exactly the same. When we saw those spikes, really the 1980s spike in silver was the Hunt brothers trying to corner the market. The 2011 one was kind of a mania phase in precious metals where it just ripped higher. This has been a more measured move higher, and what we're starting to see now, which Corey mentioned at the onset, is we're also seeing copper playing ball back above $5. We're seeing platinum breaking out to 13-year highs. We're seeing other metals starting to participate. It's almost like a commodity reflation trade going on. Maybe that's just the dollars or something else that you're looking at as far as the commodities seemingly as a group starting to pick up momentum.
No, I think I think you've defined it well, Shad. Again, we've had these kind of big rally, boom bust kind of things in commodities individually, over the last 10, 12 years. But as a group now, there's so many of them moving higher. I think actually, what is it? Silver and what is the one other? I don't even think it's not sugar. But anyway, there's only two of them left that have not made new all-time highs in the last 12 or 24 months. To me, I feel like there's this kind of a bigger groundswell underneath that provides a more solid foundation underpinning this rally than there was in 2011. Yeah, I don't know what'll happen. I'm sure when silver revisits those highs up 48.50, There's going to be a lot of selling. There's going to be a lot of people that say, that's it. This where it's gone through before. And kind of like how gold had to bang around against, gold was what it hit 1920 in September of 2011 and then didn't get back there again for 8 years, 9 years, right? And then once it got there, it banged around, like I said, for 3.5 years before it finally blasted off. That's a pretty stout resistance level psychologically that it had to get through. And silver will encounter the same thing. I'm very confident it's going to get to 48 to 50. How fast it can get through there will remain a big open question once it gets there.
So, Craig, big picture here. We're seeing commodities really get a buy. And yes, the dollar continues to be weak. It's a theme we've been hearing for some of this year, really since Liberation Day, but it was even starting before that. Is this a anti-American trade? Is this simply just money reallocating into other assets outside of what dominated for a couple decades were U.S. assets?
Yeah, it felt a lot like that back in April, right? Where the dollar was going down and bonds were being sold off and the stock market was plunging. And it definitely had that feeling. You have a mass exodus out of every dollar asset. And that's since changed. We're back to all-time highs in stonks. Bond market has been well bid as of late. We had just back, we're even lower today. So like the yield on the 10-year note closed back on Friday, and you could say this about it again today. The lowest yield since the end of April, 2 months lows. So I think more about the dollar weakness is almost kind of a front running of where the Fed will be heading from here. It's generally assumed at this point that, Powell's not coming back and Trump is going to nominate somebody that's going to be very, very dovish. And that seems to be, because again, everybody else has been cutting rates, right? You would think between the Swiss and the Bank of England and the ECB and the Bank of, go down the list. You would think the dollar should be strong because the Fed hasn't been cutting yet. But instead, here's the dollar that's weak. And to me, it kind of seems like it's front running where this all seems to be headed the next 12 to 24 months. Again, it can definitely get ahead of itself, though. And if we get later into this week, and like I said, maybe the JOLTS report is stronger than expected tomorrow, or the jobs report, you get that Friday at 8:30, 210,000 new jobs. And it's like an 8 sigma miss, higher than, everybody was expecting 80,000, or I don't even know what the expectation, but I'm just saying. You get these kind of big counter trend moves, and there could definitely be one coming, and that's all part of the risk to the metals this week.
Well, Craig, just pushing back a little bit on the idea that it's just a sell America trade. If copper is up at highs, near above $5, 509 as we record this, and it's seen as Dr. Copper, the health of the economy, not just the U.S. economy, but the global economy, that seems reflationary and like it's focused on growth. Aluminum has bounced back from where it was in April at the tariff tantrums all the way back to where it was before the tariffs were even announced. And you're seeing things like silver, which really aren't bought by central banks. They're not really considered a monetary asset anymore. I know it trades on the gold silver ratio in relation to gold, but really silver is seen more of an industrial metal now and it's rallying. Are all these metals rallying because of people actually more bullish on the global economy and trade than they were, let's say, just 3 months ago?
Well, maybe, Shad, I guess as it pertains more to silver specifically. Silver just continues to have its own very positive physical fundamentals. The fundamentals for gold are obvious, right? Because bank demand gobbling up what has been 3,500 metric tons over the last 3 years, not counting this year, when the total above ground supply of gold only increases by 1% every year. That's pretty compelling dynamic, right? And I look, everybody has varying levels of confidence in things like the Silver Institute and the numbers they put out, but we'll just go with it. 700 million ounce supply deficit over the last 4 years, probably going to be added another 200 million ounce this year. I don't see where that is changing going forward, given all of the electronic demand and everything else that where silver fits. And so specific to that metal, I think that's why I can feel confident that it's on a much more solid foundation, this rally, and that it will go to 50 and then eventually it will go through this time. Is that physical underpin, that physical foundation to this rally. It's that central bank demand that has prevented gold from retracing, and when everybody keeps saying it's gonna for the last couple of years. And it will be that industrial demand that will keep silver from retracing too. Again, keep coming back to this. I'm not saying it's going to $120 next month, but I do think that from a longer term, it'll continue headed higher. It'll go to 50. It will break through after stalling there, and it will continue higher this time.
But Craig, what about copper, aluminum, platinum? Those have nothing to do with silver. So if they're all going higher, those aren't going higher on the same fundamentals. So what does it mean that they're all going higher?
Yeah, well, kind of a little bit of dollar weakness, right? Because all those metals are priced in dollars. We're looking at their price based in dollars. They all have their own physical situation. The what appear to be shortages in platinum, in copper as well. There's some very interesting copper shortages that appear to be happening in London. I mean, they all have their own little separate physical thing. Whether you can trace that back to how the price has been discovered for all these years by the trading of derivatives and use of leverage, and maybe that leverage is starting to get a force unwound, that sort of thing. But they all have their own individual supply demand scenarios. Again, copper's another one. You can look at what's going on in China and the physical supply demand situation there. Again, they all have their own physical fundamentals, and they're all moving higher. And I guess my point is that silver's the same way. Silver's not just, just kind of tagging along with gold with nothing underneath it. There's a solid fundamental for silver as well.
Yeah, that's why it's so interesting because we're also seeing oil lag too, right? And all these things are going off their own fundamentals, but copper right now, boy, oh boy, so much news. Even on this Section 232 that Trump is investigating the copper markets. We also saw Kamola Kakula, that cut guidance. That's a major mine. There's a lot going on in the copper space. And again, it's commodities that seem to have gotten a lot more interest from investors. But hey, also investors seem to be a bit more bulled up right now. So hey, all interesting stuff to talk about. And the way this, at least precious metals bull market is run, it's a sustainable run. It's not these spike highs. So hopefully that continues to churn that way and we continue to see some more inflows, which we have started to see some inflows into the stock ETFs as well. Again, Craig Hemke, founder and editor of TFMetalsReport.com. Craig, always great chatting with you. We'll try to touch base next week.
All right, guys, have a great week.